And joining us for a further analysis on what's playing itself out on that market scene is Muhammed Wagley from Sasfin Wealth. Muhammed, always a pleasure and a good afternoon to you.
Good afternoon to yourself and your viewers as well, Melisandre.
All right, Muhammed, red screens all around. Didn't expect this, specifically as we come off the high of a November, and we were still trying to figure out what we're doing in December. But today seems to be a bit of a downer.
Yeah, definitely so. I think yesterday we were actually marginally up, but I think much like the Joburg weather that we're seeing, it's kind of all over the place, really hot one day, cold the next, and that's really what we've been seeing on the local market as well. You mentioned it earlier, we had quite a good November, so we were coming off high bases, but these losses aren't actually that pronounced. As you mentioned, it was about 0.4% down today, so it's not, I suppose it's not the most massive loss. I think everybody's kind of keeping an eye out for what the various reserve banks are going to say in their final meetings of the year. So I think that's really what's pushing markets. So pretty much going nowhere slowly, past couple of days.
I'll tell you, Muhammad, if we're on central bank watch in 2024, I'll be absolutely devastated. I want to speak about the Rand. The Rand is actually very close to the 19 mark. We have seen it strengthen a little bit, but actually it's just not faring as strong as I thought it would, considering that we are possibly looking at interest rates, the interest rate conversation in the United States changing a little bit. Let's talk about this currency and what's driving this downbeat performance.
Yeah, so I suppose, like with your previous question, this comes back to November. Around halfway through November, we were at 18 Rand 19. That's 19 cents on the dollar, and the market really ran over the course of November. Currently, we're close to 19 Rand, as you mentioned. And from my view, what I think has happened here is that we saw that nice rally in November, and I think since then investors may have been taking a little bit of profit, in anticipation of what these reserve banks are going to say. And unfortunately, Nolutando, I think we will be talking about reserve banks in 2024. Now the narrative, as you will well know, is higher for longer. How long are these rates going to stay high for? The view is that perhaps we might be lucky to see some respite in March. Maybe we'll get some cuts then. I think it could be a little bit later there, but that's really what's going to be dominating markets. So yeah, as I mentioned, if the rate cuts come a little bit earlier, I think we should see a bit of an improvement in risk sentiments, which should bode well for, I guess, the Rand strength, but really dollar weakness.
Let's talk about oil now. Brent is trading at $74.82 a barrel. Haven't seen these levels in quite a while, Muhammad. Not sure what to make of it. I mean, also if it's also temporary. Nobody should possibly be comfortable with seeing the oil price around this range.
Yeah, so I think for the time being, it could be transitory, but there are a few sort of factors that are, or catalysts rather, that are quite important. What we're seeing is a bit of a slowdown in the US economy. We're seeing a bit more of a pronounced slowdown in the Chinese economy, and that's overall sort of contributing to a weakening demand for oil. Now, OPEC has been trying to keep the price high by reducing production, but it hasn't been enough to actually offset this demand. That being said, I'm kind of hoping it does stay this way, just from a purely selfish perspective, because if I'm not mistaken, we got a petrol cut just yesterday. I think the diesel drivers would have been substantially happier. I think they got over a 2 Rand cut, but this might mean that we might be in line for another fuel cut in January, and everyone's coming home from their holidays. But yes, to answer your question, I don't necessarily think that this is a transitory thing. We do need to see certain catalysts come in before we'll see movement again in this, or more pronounced movement again in this regard.
Totally agree with you. Selfishly hoping we see these levels for much longer. Let's talk about China now. Their exports unexpectedly ticked higher in November, but imports fell slightly. Not sure what to make of this. Of course, it could be just demand globally for Chinese products after, them being closed or for lockdown. But also with imports, it means that maybe production isn't where it should be.
Yeah, I think you actually hit the nail on the head there with sort of all of your comments, really. Number one, we are coming off very low bases here, so these numbers should definitely not be looked at in isolation. And I think what we're really looking for here is a sign that the Chinese economy is sort of bottoming out. From my view, even though the export numbers came in better than expected, that is not the case as it stands. What you'll see is, yes, US shipment numbers saw a slight uptick, but what we saw was that the EU export numbers fell about 14.5%. So while those export numbers did increase, I mentioned they were coming off a low base, and the worse than expected fall in imports could actually suggest a weakening demand environment. And in my mind, that indicates that we actually still haven't seen the Chinese economy bottom out. So while I suppose if you look at the numbers in isolation, it may have appeared to be positive, in practice, we're still seeing quite a bit of turmoil there. In my mind, I suppose this represents not much of a change from what we had already been seeing in previous months. So yeah, not good news.
We'll be watching this one very, very closely. Muhammad, let's talk about Google and Gemini. It's a very interesting development because what we know from tech, if I think of MySpace and Facebook, first on the scene isn't always best on the scene. But we know that Google has been a little bit slow with their AI offering. But Gemini is here. I'm keen to get your thoughts on this development for them and what it might do for Alphabet as a counter.
Yeah, so it's an interesting one. I think many people would probably be familiar with Bard, which they released earlier in the year. Now, Google has said, look, that was just an experiment. I think what you guys will remember was that Bard actually provided the wrong answer when it was prompted a question about space. Google came out and said, listen, that was just sort of experimental. This Gemini is our flagship AI model, and it's as it stands, in their view, it is the most capable AI model yet. So I watched the video that the CEO Sundar Pichai put out yesterday, and he said he was just communicating with the AI, and I must say it was fascinating. I would recommend everyone checking it out. But essentially, the man's not an artist, so it wasn't the most well-drawn duck. But the AI recognized the duck and even commented that it thought it was odd that his duck was blue. So it's very conversational. And if I remember correctly, it even made a joke, not a good one. I think it said, "What the quack," when Sundar had colored the duck in blue. So look, I don't think Gemini is going to be winning any awards for its stand-up comedy anytime soon. But I got to say, I was very impressed with the tech, and I can't wait to try it out. But just coming back to what you said earlier, it's so difficult with new technologies. You don't really want to pick the first mover, because that isn't necessarily an indication of who's actually going to win this race. We've got OpenAI coming out with a new version of ChatGPT next year. They've said that's going to be the best one yet. Elon Musk, we know, is hard at work with XAI. They could also be a factor. What we do know is that the tech is here to stay. We just don't know who's going to be at the forefront just yet. My view is you want to get some diversified exposure here. If you can't pick the winner, you pick a company that's operating sort of across the AI spectrum. So that's probably how I would play that field for the time being.
Very interesting times ahead, Muhammad. Keen to get your stock pick, but first let's start off by looking at counters that have found favor with your industry peers.
I'm going for property company Growthpoint. I've read now on many companies, many property companies, when they come out with their results now, the worst seems over for the industry. Office vacancies, even though they're still high, are actually going down. Negative rental reversions. In other words, when you sign a new lease, your actual price per square meter comes down. That negative reversion is still negative, but it's significantly less than what it was. Overall vacancies, are down. And you're getting half decent rental escalation in your new leases that you're signing. You're getting 5-6% rental escalations. And I mean, Growthpoint in particular, I'm only choosing Growthpoint because it's the biggest and probably the most well diversified, but you're getting a 12% starting dividend yield. I know you pay tax on it, but that just seems like reasonably good value to me in an industry that's maybe over the worst.
My stock pick tonight is Life Healthcare Group. They have announced the sale of AMG that should be wrapped up early next year. And with that cash in the bank, shareholders can look forward to a special dividend of between R4 and R5 a share. That's what's expected. And what you're then left with is a South African hospital group. And let's be honest, the South African hospital industry isn't too exciting. And Life Healthcare hasn't really shown positive operating gearing. So that's a bit disappointing. But the other part of the business that you'll get is also Life Molecular Imaging, where they sell what is called a tracer, a radioactive agent that assists in when scans are done, specifically in the US through new technology for Alzheimer's, and a new drug that is being used for Alzheimer's in the US. So the expectation is that LMI will grow strongly in the next 2 to 3 years, while the SA hospital business will at least be stable. And notwithstanding NHI, and I see it's been passed through the National
Council
of Provinces tonight. It's not quite as bad for hospital groups as it is for insurers, and I'm sure there'll be a lot of legal challenges as well. So Life Healthcare is not too badly placed in South Africa with their hospital service, plus the upside from LMI, plus a special dividend on its way. So that's my stock pick tonight.
So I'm picking Mondi. It has had a nice recovery off its lows, but it's still relatively cheap relative to its history, is very well placed to benefit from a recovery in the European and the global growth outlook over the next 9, 12, 18 months. If we see a turning in the rate cycle, which it looks like we are seeing, and we're going to subsequently see a nice recovery, as an investor, you need to look through the short-term noise, and I think Mondi is very well placed to be a beneficiary of that longer-term improvement in the global growth cycle.
All right, Muhammad, keen to get your thoughts on those growth points, Life Healthcare and Mondi.
Interesting picks. So I'll start with growth points. I think that was the first one that the sort of the analyst had covered. This one's quite interesting. If I look at month to date, they've actually done about 12%. And he made mention of it looks like the worst is over, and I think there's actually merit to be had there. He also made mention of office vacancies sort of declining progressively. People sort of coming back to offices will stand to benefit them as well. This is one that I quite like. I was a bit worried from a timing perspective, but I think there's quite a bit of merit to what the gentleman said there. This looks very attractive, I've got to say. And then let's move on to, I think it was Life Healthcare was the second one. So this is a bit of an interesting one. I couldn't agree more with what the gentleman said in terms of sort of the growth coming from the US and the sort of life molecular imaging, the tracer that they sell over there. And, it's used for Alzheimer's, which is, unfortunately very pervasive. And that represents, quite a good growth prospect there. So I think that's quite interesting, definitely worth looking into. And, very curious about it. Personally, it's not one that I follow super closely, but I can't fault the logic there. Genuinely sounds good. And then the last one that you guys mentioned, or what the analyst mentioned over there, was Mondi. This is one that I quite like. Genuinely, it's got most of its exposure sort of outside of South Africa, so it's not really exposed to us. And I got to agree with what he said in terms of, if the global growth outlook plays out the way that we think it will, they'll be in quite a good stead. And one has to remember that Mondi is actually coming off low bases. They had been impacted by the Russian invasion into Ukraine, so it's been sort of turbulent past couple of years. And I'm hoping that improved growth outlook, especially globally, is going to positively impact them. So long story short, I like all three of these picks.
Now, we don't have much time left, Muhammad, but I'm keen to get which counter you're going with this afternoon.
Okay, so this week I'm going to go with something slightly different. I'm going with Constellation Software. So it's not different in that it isn't tech. It is very much a software company. They're a Canadian company headquartered in Toronto, but as you can imagine, they've got operations all around the world. Now, essentially what they do is they specialize in acquiring small software companies that service specific or vertical markets. So it's not the sort of company that will buy a company that is sort of applicable across a range of industries. It's very sort of well-defined. It's very niche. And what they do is they grow these businesses, and then they have these businesses synergize with already existing businesses within their sort of suite of companies. They don't ever look at selling these companies on. They really are sort of investments, and I don't think they've ever actually sold a company. Rather, they integrate them and then have them benefit from the synergies throughout other businesses. In addition to that, the company's got great cash flows. Their customers, their clients love them. They've got a massively high retention rates, and business relationships last, I think, for over 20 years on average. Now, the company's done already about 50% this year, and since listing in 95, 95. They're actually one of the best performing shares just in general. I think we're talking about 17,500% since 95, you know, which is a very challenging track record to keep up with, you know, but the management team there is excellent in my opinion. And, you know, this is the type of share that's always going to be, you know, expensively valued. And it is a big ticket share as well. You know, it'll cost you about 3,250 Canadian dollars for one share. But I've got to say, I back the management team. And I suppose the bet here is that this acquisitive strategy that they have will continue to pay off as it has been. And yeah, that's the play that I'm going with, Constellation Software.
Wonderful, Muhammad. Always a pleasure having you. Thank you so much for your time this afternoon. That was Muhammed Wagley from Sasfin Wealth.